What is the fundamental pattern of any market that's trending? Well, it depends on the direction, right? So if a market's trending up, we expect to see higher highs and lows and all the downswings to be relatively the same. Just flip what I just mentioned over and you have a market that's heading down. Now this is certainly, it's basic knowledge that any trader should know and be able to profit from, and I want to show you how. Trading pullbacks in price is a basic trend trading move that has a huge following. Most educational websites talk about trading pullbacks in various ways, and many even have different names for the pattern. It's pretty great marketing when you can show incredible trades all using your special pullback pattern like the hip-lisk T-play, which is basically a high probability, low risk trend play. And yes, I made that up. So let's keep it real and call a pullback or one of its many variations for what it really is. It's a pause in a trending move. Yes, eventually these pauses can begin a longer term move in the other direction, but let's just keep it relatively simple. Also, the probability, it leans on the trend continuing, not ending. Now, even if it ends, we do have ways to get involved, but that's beyond the scope of this piece. So these pauses in the trend, or the pullbacks, can generally be either one-legged moves, which is a simple pullback, or two-legged variations, the complex pullback, on your trading time frame. Understand, though, that the pattern that you see on your trading time frame that appears as a simple pullback can often be a complex one on a lower time frame. By the same token, your complex pullback can be a simple pullback on a higher time frame. This chart here, it shows a red candle after a thrusting green candle, indicating that we're in a pullback. However, all you really see on this time frame is pretty much a range, but looking deeper, you will see this is actually a complex pullback. This chart here, it's one time frame lower, and it tells a different story than the previous chart. It's clearly a complex pullback, but the tip-off was the formation on the previous chart with the shadow on the red candle. So what looked like a difficult play on the longer term chart, you can see that an entry off of this chart here shows a much better structure. So the question now becomes, how do you enter this move? Now, I did not find the cleanest example, but more often than not, we're not going to be facing the A+ trading conditions, and that's okay. And it's okay because all we're looking for is an indication that the correction is losing steam. A complex correction actually gives us a great way to enter a trend trade long, and that is through a failure to break lower. The lower time frame chart shows us how to do it. At A, this long shadow indicates buyers either on a simple pullback on this time frame or a complex pullback on a lower time frame. So where do all the textbooks and overpriced trading courses tell you to place your stop? Below the swing, but is that really the best spot? Because B, the second part of this pullback, breaks below A and takes out stops of the weekend longs to a tight stops below that shadow. This should have you on alert for your entry into the trend. So since the trend is up and we see a failure to break lower after the complex pullback, those stopped out have to re-enter. And you can see that B breaks the low with strength, but there is no follow through. In C, price closes back over the breakout point, indicating that the potential bear pressure has failed to materialize after the break. The green arrow indicates the candle where you would initiate a long position either on the close or a break of the high. It takes a few days for this trade to really work out of this pullback, but when it does, it rallies over 400 pips in 8 trading days. So that sets up the complex, but what if we only get a simple pullback? Now this chart has a trend grinding itself up, and while it's not favorable setup conditions on the trading time frame, the higher time frame supports the moves with several failures of a lower break, and I have not shown this chart. A, this big red candle can be a concern, but remember I mentioned the corrections to be relatively the same? Well, this drop has the same symmetry of a previous correction, so it's not an unusual occurrence, but it's characteristic of the current volatility of this market. In B, price is consolidating at the lows of the pullback, so the question is how to position ourselves into this move. So let's drop lower out of our trading time frame and see if we can locate when bullish pressure is mounting, or at least have a structure that points to a break. This chart here shows us a range forming inside the range close to an area that has shown resistance. When price holds close to one side of a range, it often indicates where that strength lies. So what are we seeing on this chart? A, price pops through the low of the smaller range, can't hold, and then closes inside the range. Does that look familiar? Well, we saw it on the complex pullback example. In B, we have several entries available. 1, once the price breaks the low, fails to move lower, and then closes inside, it offers you an entry. 2, this candle breaks strongly out of the range, and you can buy the close or buy stop when the price moves above the candle. So wait a second. We hear breakouts fail most of the time, and I agree. There's a difference between playing a breakout just to play a breakout and then trading the break to enter into a higher time frame structure. Now that's just a topic for another piece. So this is certainly a top level look at pullbacks, as there are a few nuances that have been left out for the sake of this piece. We also did not cover stops and targets, but that could be something covered in the upcoming weeks. There are other methods that you can use for pullback entries, and some of the popular ones include indicators. By understanding price action, structure, and trading around areas where buying or selling pressure will enter at an imbalance, you could forsake many of the cookie cutter trading methods that just litter the internet.